of Emmer Capital with us on the show. Manishi, great having you. Thanks for taking the time out. How are you viewing this price action, Manishi? I'm compelled to ask this to you because, I mean, we've seen the FIs come out and buy very strongly in trade yesterday. Some notes, including CLSA's Lawrence Blanco, saying this sets the stage for the Nifty hitting all-time highs. Are you as constructive?
Eventually it will. I don't think it'll happen in the near term. I think the FII enthusiasm about India and in general about the whole of Asia stems from, the caution about the developed markets, particularly the United States. I mean, we have seen even U.S. bonds selling out, U.S. bond yields hitting, that 4.5 to 4.55%. And I think what we're seeing in Asia is kind of an offshoot of that, increased risk perception about the United States, and therefore money moving in the direction of emerging markets, which is exactly the opposite of what was happening in the second half of 2024 and in the first few months of 2025. It's good that we have also seen at the same time, some fundamental changes. We have seen at least some baby steps taken towards resolution of the trade war. We have seen discussions between US and China. We have seen a trade agreement between India and the United Kingdom, and possibly a few more coming, from the United States as well. So, I think things are fundamentally and flow-wise beginning to look better. And when one looks at India in the context of Asia, there are quite a few tailwinds, but the most important of them are the potential revival in consumer spending and government spending on infrastructure, and the downward trajectory in interest rates. Now, the RBI is clearly on a rate reduction path, as most of the central banks in Asia would have to be to protect their domestic growth. So when you put all this together, things are looking good. The only problem is earnings estimates are not really still keeping pace with it. I mean, during this quarterly result season, Indian earnings estimates have come down, not much, by about 2 to 3%. So that is something we have to be mindful of.
Hi, Manishi. Morning. Alex here. I'm just wondering then, at this point, so you're saying that you're not anticipating all-time highs in the very near term. So what, according to you, will drive markets at this point? Will it primarily be flows that determines the near to medium term move, not just for the Indian equity markets, but quite a few markets globally? Right.
So I think in the near term, I mean, if you look at the next 1 or 2 months or so, India would possibly move in line with what the other Asian markets would be doing, particularly the larger markets in North Asia. So I don't really expect any significant outperformance from India in the near term, partly because of the premium valuations that the market is trading at. India always trades at a premium, and it should, but the valuation premium at about 55% compared to Asia ex-Japan is significantly higher than the long-term average of 40%. So, coming back to your original question, that what would drive the Indian markets, I think it would be a combination of flows and slightly better outlook about, the growth outcome that could happen, as a consequence of consumer spending rising. And, as I said, even the infrastructure spending on the part of the government coming back after, we have seen a lull in that in 2024.
Okay, Manishi, some I wouldn't call it an offshoot, but some smaller pockets wherein the data coming out seems to be pretty strong. So we all know about defense, and last few days we've spoken only about defense. But suddenly this morning I got data that wind installations, for example, in India in the month of April were over 1,000 megawatts or 1 gigawatts, right? Relative to maybe 250 megawatts in April last year. So that bucket seems to be really turning the corner. There is some serious shipments happening from CDMO companies out of India as well. And that bucket seems to be doing well. So have you picked up data points around specific pockets which really interest you?
So, some of these points that you mentioned, particularly CDMO, generic manufacturing, and, green energy, I think these would be the mainstay of not just Indian markets, but of many Asian economies, which have a degree of competence there. China is the first market that springs to my mind as far as green energy, particularly solar energy, is concerned. They have most of the IPs, the intellectual property in this area, and they're also a giant manufacturer. In case of India, I think wind energy is possibly bigger than solar. Though much of solar equipment is still imported from China, it'll continue to be in the foreseeable time horizon. But I think some of these pockets, like defense, like green energy, like the contract manufacturing of pharmaceuticals, they would continue to gain precedence over others. I would also focus on some of the EMS companies, the electronic manufacturing. The valuations are not cheap over there, but I think if we are likely to go through this, what's called the China plus one scenario and the diversification of supply chains globally, then some of those electronic manufacturing companies would also be something that investors should look at.
Manishi, I'm wondering, and often we talk to you about equity, but do you see any interest in your peers as well, foreign institutional investors? Do you see opportunities in fixed income in India, and do you see flows into the debt markets in India go up, especially in a scenario where US bond yields now overnight have moved lower and maybe directionally could move further down over the course of the next coming months?
See, right now, I mean, Indian bond yields are coming down, the US bond yields are going up, right? So that attractiveness for the Indian corporate and government bonds, they're relatively lower than what they used to be, if you look at late 24 or even earlier. We're seeing more enthusiasm for the Southeast Asian bonds. Particularly, I would point out Indonesia, Philippines, Malaysia, where I think that bond yield differential is still significant. I mean, obviously, Indian bond yields or Indian bonds in general, they are a lot safer. The credit ratings are higher. The Southeast Asian bonds are more volatile. So to that extent, there's always enthusiasm, a degree of attraction for Indian fixed income paper, which is, I think, also reflected in what Reliance Industries did. I mean, almost, I think, about 2.9 billion raised through overseas bond issuances. But if I look at the most recent trend, I think the conversations with the foreign institutions are more about the Southeast Asian government and corporate bonds.
Got it. All right, Manishi, thanks so much for joining us this morning. Pleasure speaking with you.